Welcome to another stage analysis video. It's Sunday the 26th of November 2023. I'm going to start the weekend video this week with a look at the major indexes before getting into the more regular content, looking at the industry group relative strength rankings, the bell curves, the market breadth, the watch list stocks and more. So starting off with the S&P 500 here, you can see at the moment, relabeled this a little bit at the moment, we're making now with two swing high breaks on the weekly chart here. We've got potential stage 2 continuation attempt underway. The first one was a bit low to be considered a stage 2 continuation attempt, as it was still back within this broader range. So we're still in the range, but we're getting back towards the upper end of the range now. So potentially this could be a continuation attempt. Not quite there yet. It might need to do more, but obviously near-term strength has been strong. If we go to the daily here, you can see 88.6% of stocks are above their 20-day EMA at the moment after the double bottom shakeout at the 200-day moving average here. Come back to the weekly chart here at the bottom. We've got the combined percentage of stocks above their 50-day, 150-day and 200-day moving averages chart for the NYSE and Nasdaq. So it covers just over 5,000 stocks or so, and this is currently sitting just under 50%. It's at 49.92 if I remember correctly. So really neutral position here, as the market is borderline between stage 3 and stage 2 here in the S&P 500. So obviously extremely neutral position for the broader market as well here. So S&P 500 in a critical position here that we could obviously turn into an up thrust and start to roll back into the stage 3 range here, which means obviously up thrust after distribution. You could come back into the range and start coming back down into stage 3, or we could make a continuation breakout and follow on. So to give it a borderline between stage 3 stage 2 at the moment, but no definitive obviously stage currently. Back to the daily here, the short-term strength is obviously evident with it being above its +3 ATR level for the majority of the last 2 weeks here. So you don't often see that. Normally you get to the 3 ATR level, which you can see, you normally get some kind of consolidation or pullback following that, as it's a little bit extended in the short term. So we have had obviously some gaps recently. So most recent gap back around this 400-500 area. So potentially, as long as we're in this +1 ATR level and above, we're in that short-term uptrend, but still within this broader structure here. Look at the Nasdaq 100, which has been the stronger of the major indexes year to date. I think it's up over 46% year to date now. So had a very strong stage 2 advance. Did obviously briefly dip into stage 3 and could again potentially still be stage 3 here. This could turn into an up thrust and come back into the range. So you can see obviously the broader range. We started to dip down into stage 3 territory. So potentially, unless we can obviously consolidate and push through to new highs, this could still be developing as stage 3. But at the moment, obviously benefit of the doubt with the near-term strength, obviously the strong move we've had over the last few weeks, 4 weeks or so, which we haven't seen many of. We go back in the past here, so this 4-week move here, you can see we haven't had too many strong 4-week periods or so. We've got 3 or 4 weeks there. This move through here, similar move through this area here, around 4 weeks, only a 3-week move there, 4-week move back through here, etc. There's generally, after a strong short-term move, you tend to get some kind of period of consolidation. So the fact that we're sitting right at the highs, we've still got earnings this week, especially in the software names, which obviously Nasdaq 100 has a fair few of those. It is in a strong position, low at 71%, but there is still that obviously risk factor that this could come back into the range. It is a little short-term extended, obviously broken some near-term pivots through here. So a pullback consolidation into the range here wouldn't be the end of the world, but would obviously give us potential warning that we may still be developing stage 3 characteristics. But doesn't mean it couldn't still continue on and make a stage 2 continuation breakout attempt once more. but at the moment, again, like the S&P 500 here, we're on the borderline, but percentage of stocks above their 200-day moving average, as I said, at 71% in the Nasdaq 100. So it is, from the market internals perspective at least, in a stage 2 type environment because of that, as there's obviously more than 2/3 of the stocks above their 200-day moving average there. Obviously sign of a strong index. If we look at the daily chart, again hovering around that +3 ATR level, just underneath that at the moment, above its 2 ATR level. So as long as we're above that +1 ATR level, we tend to be in a short-term uptrend. But again, we're still within this structure here. So we were in stage 3 and we're now attempting a stage 2 continuation attempt. But obviously with the shortened holiday week, obviously wasn't much appetite to push it higher there. So this could obviously go either way here. We're at a pivotal point, but again remain strong in the short term at 84% above their 20-day moving average in the Nasdaq 100. So going to be a critical week this week coming up. Nasdaq Composite, similar kind of moves, but not as strong as the Nasdaq 100. We have broken obviously above 2 pivots here, so again a potential stage 2 continuation attempt. Can't spell there, but the A and U backwards, but very, very similar to what we're seeing in the Nasdaq 100. Only 32.68% above their 200-day in the Nasdaq Composite, but we do in the Nasdaq have quite a large percentage of the healthcare biotech type stocks, so they tend to, they've been lagging year to date, which has held the Nasdaq percentage of stocks back, because that's been the weakest area of the market in the sector breadth all year. So you get a different picture than that if you look at the S&P 1500 data above their 200-day moving average, which includes the NYSE and the Nasdaq data. So I'll show you that in a little bit. If we look at the daily, again similar move back up towards the old highs, still within this broader range. Potentially could still be stage 3, but attempting obviously a continuation breakout after breaking above 2 near-term pivot highs, obviously in a short-term uptrend within the range. 66.84% above their 20-day moving average in the Nasdaq Composite there. NYSE, we're back above the 30-week moving average for 2 weeks now, back into this obviously major zone of resistance here, which obviously had formed pivot lows, pivot highs over the last 2 years multiple times. We've had a few up thrusts above it in the last year here. So a critical level to push through for the NYSE in order to potentially move back into stage 2. Technically could potentially be stage 2. If we look at the moment, we're at 53.4% of stocks above their 200-day moving average in the NYSE. So again, very neutral position. Anything between 40 and 60, you're in that neutral range. Obviously 50% completely neutral, so just above the 50% level there. Look at the daily chart here, again above the 1 ATR level, poking up to the 3 ATR level in the short term. So in a short term uptrend here, broken above obviously these near term range. It's a little bit of a inverse head and shoulders pattern. 78.87% of stocks above their 20-day moving average at the moment in NYSE. So we're above the 200-day, obviously starting to poke above around the 3 ATR level there, but still got near-term resistance. So technically borderline, poking around potential stage 2 area. I'd want to see it clear at least one near-term pivot high. So the most recent being this after the 200-day moving average here. So we can start to get back above that 16,200 level. Go back to the weekly chart here. Then we potentially start pushing up towards stage 2 again. So at the moment, the Russell 2000 next. 47% of stocks above their 200-day moving average. If you use with the stock charts data, we don't have the Russell 2000 percentage of stocks. We only have the S&P 600. So proxy of the small caps data, but it gives a good enough estimation. So 47%, again, very neutral position. Obviously 50 being completely neutral, 40 to 60 range is your neutral zone there, sitting just below its 30-week moving average here, above the 10-week moving average, which is still below the 30. We look at the daily, still below the 200-day moving average here. So I'd say we can get back above this 182 pivot that formed in the last few weeks here. We're at 77.33% above their 20-day moving average at the moment. So short-term strength off of the low in November here. We'll see a shakeout move, failed stage 4 attempt there as it comes back up into the range again, similar to what we see in the NYSE here. A little bit of a inverse head and shouldery type look to it, but obviously needs some more strength there. If we go back to the daily, we've got a lot of overhead resistance. It's basically been going sideways for a year and a half here, so technically it could, because it'll get back above its 200-day moving average, it could somewhere in this area get back into stage 2, but you can see there's going to be a lot of obviously overhead resistance for this to deal with. As multiple times, see significant bars here, like back in March, it's failed to be able to get through significantly without rolling back over again. So obviously a stronger resistance here, and it's going to need a lot to get back into a clear stage 2. Look at the VIX. This continues to pull away from its 200-day moving average up here around the 1698 level at the moment, so testing the lows of the year currently. So it is currently the strongest it's been all year, so in terms of the least volatility. So potential for a stage 2 continuation if this can continue to drift off. But at the moment, obviously, we're still with it being in a key area. There's also that risk that this could spring back into the range again.